In this video, we'll evaluate the common size income statement for Coca Cola, that's stock symbol KO, and Pepsi Cola, stock symbol PEP, for the period 2012 through 2016. A common size income statement, or some people refer to this as vertical analysis, divides all the numbers in the income statement by revenue or sales, however it's reported. Coca-Cola has lower revenue than Pepsi Cola. It's about $40 to $45 billion as compared to $60 to $65 billion for Pepsi. So it's hard to compare the actual numbers because they're on a different scale. By scaling everything by revenue, it's easier to compare the two companies. Starting with the cost of goods sold, we notice that the cost of goods sold is much lower for Coca-Cola than it is for Pepsi, which creates a higher gross profit margin. Gross profit for Coca-Cola, which is like a metronome over here, is about 60.5%. Okay, call it 60.5, low 60s, as opposed to only 55% over here for Pepsi. Pepsi's has increased a little bit, but it's really in the low to middle 50s. So there's a material difference there, and it's kind of surprising on the one hand because Pepsi has a higher proportion of its product mix in snack foods. Pepsi owns the Frito-Lay company, and the margins, the gross margins in snack foods are actually higher than the gross margins in beverages. So there's other things that are at work here. But one thing that we do know is that the gross profit for Coca-Cola is higher. If we go to the selling, general, and admin expenses, it's almost identical for these two companies. All right, if we go down to the selling, general, and admin expenses, as a percent of sales, they're almost identical between these two firms, right around 35%. Depreciation and amortization, right around 4% of revenue. So that gives us operating income over at Coca-Cola of about 20 compared to 14 to 15 over here for Pepsi. So the operating profit as a percentage of sales is higher than Coke, and again the reason is that they have a higher gross profit margin, and that probably reflects some differences in either scale or in product mix. When we get down here to net income, there's still about a 5-point advantage for Coca-Cola in the latest year, but notice that Coke was much higher. They were twice Pepsi's net profit margin in 2012. Pepsi's has stayed fairly stable at right around 10%. Coke's has moved down a little bit in the last few years from 19, 18, 16, 16 and a half, 15 and a half. All right, so that's how we use vertical analysis. We can use it to look for trends in numbers, and we can also do comparatives between two firms by putting them back onto the same common scale of percent of revenue.